Hello, hello. Welcome, everybody. How are we doing today?
Good. I'm doing well. How about yourself?
All right, awesome. I'm doing well, thank you. Welcome to today's webinar. I do see people hopping in. I'm going to give people, 1 or 2 minutes to come through the door and get comfortable. And
Yeah.
then we can hop into introducing everybody and getting into the good stuff.
Yeah, everybody should get comfortable because we have a lot of good content today.
Awesome.
Yeah, coming at you from the East Coast. Jeanette, you're on the West Coast?
I am on the West Coast, so just outside of Los Angeles. Let's check in with everybody. Everybody in the chat, where are you from? And then we have all of our lovely ladies here. Tracy, I know you're East Coast. Venus, Shanika, Crystal, Jenny.
Also East Coast.
Yep,
Nice,
East Coast, Atlanta, Georgia.
nice,
Columbia, South Carolina.
A
nice.
little East Coast and West Coast going on.
West Coast, yes.
Awesome, awesome. Well, yeah, we got a good amount of people here. So don't want to keep them waiting. This
It
will be
looks like the
recorded.
chat is disabled. You check
It's-
on that. Jasmine said the chat is disabled.
Okay, let's double check the
People,
chat.
how is she on?
All right, we'll look into that. Thank you guys so much for joining. Welcome, everybody. We are happy to have you join us for this insightful session. We're going to be discussing the potential of limited partnerships in the hospitality sector. So whether you're a seasoned investor or just starting, you're in the right place to learn how to grow your portfolio and become part of a transformative movement in real estate. So we have She Has a Deal founder Tracy Prigmore, along with several other team members. So this webinar is going to be a great opportunity for you to learn and how to invest, limited partnerships, earn passive income, and just enjoy and be a part of a movement that's reshaping the hospitality landscape. So I'm going to pass it over to Tracy, but everybody sit back, relax, and get ready for some great information.
All right. Well, hello, everyone. I'm Tracy Prigmore. I'm the founder of She Has a Deal. I'm also a real estate investor, as well as a hotel owner operator. And I like to say now developer, although they say you're a developer if you do major renovations of a hotel. So I started my hotel career back in 2014 as a limited partner. So I'm really excited to share with you all that I have learned on the journey as a limited partner, as well as now always a general partner. I'd love to share with everyone how they can build wealth through real estate. And that's what I did starting around 20 years ago. It's kind of scary to say. Actually, oh my gosh, 25 years ago. Shoot, y'all. Time is flying by. But yeah, I'm really excited to be here. We're have a few things that we're going to share with you today, and I brought some of my partners along with me. But what I want to share with you, and please feel free to ask questions in the chat, or at the end we'll open it up if we have some time for questions. But I want you to understand limited partnerships. They're a great way to invest passively. I like to say, as a sponsor and a general partner, is that we do the heavy lifting so that you can enjoy the passive income. We're going to talk about a lot of people are intimidated and didn't know that they could own hotels. And we're going to talk to you about how you can own hotels as a limited partner. But what's really important is you got to protect your money. So I like to, really share some tips around mitigating investment risk when you are a limited partner, because you're not necessarily in control, but you have money on the table. So we want to make sure that you're carefully investing and doing your due diligence. And then a very important thing, I started in 2007 after going to a mastermind in Maui, which was learning that I could invest in real estate with my retirement funds. So I had retirement funds in the stock market, but I'm a real estate girl. And when I found out that I could tap into those retirement funds to invest in real estate, I was just super excited, jumped right in. And I've been doing that since 2007. We'll talk about how you can do that. And then we're going to talk to you about some opportunities. We're going to talk to you about how you can find opportunities or how you can actually explore the opportunities with She Has a Deal and our Shad alum, as well as sponsors. But before that, let me introduce you to a very important person that's a part of our team on the journey, Crystal Chi, who is the manager of investor relations and asset management. And if you invest with us, if you're one of our investors already, or you plan to invest with us, you'll get to know Crystal very well. She's there to help you with completing all your documents, and we'll talk more about that. And then I wanted to introduce you to Shanika Thurman because she's our executive director. She's new with She Has a Deal. Probably what, Shanika, are you only like 2 weeks old, maybe? But Shanika is here, and I wanted to introduce her because if you like the content that you're learning today, we provide educational content to help elevate not just women into hotel ownership, but anyone who has an interest. And Shanika will be running those programs as we move forward post Shad Pitch, which is May 1st. I'll tell you about that soon as well. And then we have our Shad alumna and Shad Momentum sponsor, Venus Gervin, who will talk about her amazing, exciting boutique hotel project, The Peridot. She's with Emerald Investments, and we'll meet Venus as she talks about her deal when we talk about opportunities. And also, you'll have an opportunity to meet Jenny Jackman, who is with J Jack Hotel. She's also a Shad alumna and a Shad Momentum sponsor, and she's constructing a new hotel from the ground up, Truly Redlands, the True by Hilton in Redlands, California, that we've partnered with her on, and you'll hear from both Venus and Jenny about their projects. All right, so I'm going to jump in. I have a lot of content here, and I tend to I probably talk too much, but I always want to make sure that I'm an educator at heart, that my students or people that I'm hoping to inspire and empower to use real estate as a wealth builder will learn and really learn from my mistakes. So I started She Has a Deal because I wanted more women and underrepresented minorities to have access to real estate investment, commercial real estate investing. And I could just see where there's just so much gaps in information and access to become a sponsor or to own commercial real estate. And I just wanted to make it easier for people. And so She Has a Deal has become everything that I wish I had before I started investing in hotels and commercial real estate. It's everything that I've learned along the way. And it's everything that I continue to learn as I go on this journey. It's a journey, and I continue to grow in that journey and hopefully bring others along with me. So I like to say, I forgot who said it, but it was like lifting while you climb. So I want to make sure that you have the information because I've made my share of mistakes. And if I can help you leapfrog, the rookie errors that I have made, then, that's what I want to do. So that's why I have a lot of content I'm always sharing. And don't worry, we'll send you this PowerPoint if you like. And I will have a recording, I think, Jeanette, as well. So, right, Jeanette, we'll have a recording that we'll send out, or some wrap up from the information. So just sit back as we jump in. And some people are, just very familiar with limited partners, but maybe not how they work, or they've heard the term. But a limited partner is essentially a part owner of a company, any type of company, whether it's for real estate or another type of business. You're, a part owner of the company. The difference is that, you invest money in exchange for shares or units in that company, but you're not involved in the day-to-day. You're not necessarily the controlling partner. There's usually restricted voting powers. So you may have some voting powers, but they may be limited. That's why you have the term limited partner. And you are not necessarily involved in the day-to-day involvement. In fact, from a tax basis, you're not involved in the day-to-day involvement because it's a passive investment. And the tax treatment, income tax treatment, is different for passive investors versus active investors. So if you are a limited partner, you want to make sure that you stay passive so that you don't trigger any of those active tax rates. And the reason also is it's limited liability. So your risk is really limited to the investment, how much you invest in the deal. So when you have other partners who are the general partners or sponsors, and in my case, what I do, I'm at risk for a lot more. So not just the money that I invest, but I'm at risk for the loans that I guarantee or the franchise agreements or all other debts that you need to operate your hotel or, the business or, other types of commercial real estate. So as a limited partner, you put in your money, but you're only at risk for losing whatever you put in. So no one can come after you for additional money or any type of liabilities. Okay. So that's essentially the definition of a limited partner. So limited in that particular company. Now, you're probably asking, what's the difference between a limited partner and a general partner? So the general partner, which is what I do on a day-to-day basis, we assume responsibilities day to day, every day, whether you have a manager, and if we talk specifically to hotels, if you have a management company and a general manager, you may not be there day to day, but you have responsibility day to day. So I might get a phone call if something crazy were to happen or something that, would be important for me to know as the fiduciary or, the person responsible for the investors of the company's dollars for their assets. I'd be there day to day, but I do have a day-to-day responsibility to ensure that the company, the investment its value is maximized. So I have the authority to act on behalf of the company. And I have this fiduciary duty. And I say generally, and I'll talk about that a little bit later, but as a general partner, if you're investing in a project, you want your general partner to have fiduciary duty. There are some states where you can waive that as a general partner, but I don't recommend that you enter into a partnership or a business where the general partner who is in control of your, destiny, your dollars, that they waive their fiduciary duty. So you want to be very careful to look at that in the documents, and I'll talk about that later. But that general partner is assuming the full liability, for the venture. So they're responsible for seeing that it succeeds on a day-to-day basis. So essentially, people ask me the question, like, what's a sponsor versus what's a general partner? And you'll hear those names, tossed around. Sometimes they're one and the same. Sometimes they could be different. But essentially, they're the same. So general partner is a legal term, and it's really used based on the structure, of the deal. So I'm going to talk to you about some other terms that are essentially the same, but they may be different based on the investment structure. But a general partner, a sponsor, the sponsor is going to manage that investment, raise the capital, make key decisions, and take on the full risk. So I like to explain it as it's like the quarterback, of the deal. It's the person with the experience and the expertise. So you as a limited partner may not have the expertise, in hotels, or, we own a winery and a vineyard. And, you may, as a limited partner, not have expertise there, but you want your general partner, your sponsor, to have that expertise so that they can maximize the value of your investment and make sure your investment grows. Because let's face it, we're all investing to make money, to increase the money that we put into the deal. So we want our general partners to be savvy, to be knowledgeable, so that they can grow that investment. So any investment, it's like, where are you going to add value? That general partner, that sponsor needs to create the value in that particular business that you have invested in, so that your money grows. So what's the difference between a limited partner and a member? Again, these are terms and they get tossed around. I use limited partner a lot. I use general partner a lot, but in actuality, we mostly form our partnerships as limited liability companies. Those are LLCs. So in a limited liability company, the limited partner is really a member. So the real technical term, even if you hear someone say limited partner, if you are in an LLC, you're a member, okay? I always have to kind of remember that, although they can be used and interchanged. But legally, I was on the phone with our lawyer today, and we're negotiating a deal for a limited partner to come in. And, I had limited partner and he's like, take that out. No, it's not limited partner, it's member. So because it's a limited liability company, you are a member. Okay, so limited partner, member, it's meaning the same thing. Everything I just taught you before applies to the member. Okay, so as a member, you're limited as well, but it's a member when you're talking about a limited liability company. If you're talking about a limited partnership, then technically or legally, it's called a limited partner. So whether you use the term limited partner or a member, it's based upon the legal structure. Again, the terms are used interchangeably. And when you have a limited liability company, instead of a general partner, it's the managing member. So in a lot of my projects, as what I've been saying, general partner, I'm actually the managing member. Again, same responsibilities. The responsibilities do not change. I'm still I'm still the fiduciary and responsible for managing that investment and maximizing the value of the asset for investors, acting on behalf of the investors, not my individual self. Okay. So I wanted to share with you a sample investment structure. So this is actually a hotel partnership that I put together as a managing member or general partner. And it's a Hampton Inn that we bought several years ago. And I just wanted to share the structure with you so you can really understand how you fit as a limited partner or a member. When you're putting these partnerships together, when you're putting these investments together, particularly I'll speak to the hotel, but again, this could go across to companies, and other types of commercial real estate, but you are going to have a legal name. So in this case, our legal name, I named it Waldorf Prosperity, and it's a limited liability company. We formed it in Delaware, and there's some reasons that you'll probably see a lot of partnerships formed in Delaware and other states that do not have taxes. But also the reason why I choose Delaware is because Delaware has this chancery court that really understands these types of partnerships. So if you ever have any conflicts or anything like that, they know how to mediate, arbitrate, and have the trial for these types of partnerships. But we do mostly form in Delaware. So Waldorf Prosperity is the entity or the company that was formed to own the hotel, the Hampton Inn, which happens to be in Waldorf. Okay, so this can apply to any hotel anywhere. This is the structure. This is one, structure that can be formed. This is pretty much the most popular, I would say, in the investment structure of this sort. And so the limited partners are the investors. And in our deals, we structure our investments where you can invest as a self-directed IRA using your retirement funds, which I'll talk about. You can invest as an individual or an entity or a trust. Okay. So an example of an entity is an entity was formed called Waldorf Legacy Group, LLC, with another group of investors who invested in Waldorf Prosperity. So all of those entities or individuals, they're limited partners or members of Waldorf Prosperity, LLC, limited liability company, a Delaware entity. And they're usually formed as a single purpose entity or vehicle, which means that it was only formed to own this hotel and to run this investment. So once the hotel has been sold and all the assets have been split amongst the net proceeds amongst the members, then Waldorf Prosperity will be dissolved. So Waldorf Prosperity only owns the hotel and its assets. And we do that, right, because we don't want to be at risk for liability on anything else. So we keep it to the one property because we want that property to be protected and not have any other potential liabilities other than the operations and what's going on at that particular hotel. So you'll see that a lot in these type of investments, a single purpose entity or vehicle in the way of a limited liability company. The investors own shares, or when it's an LLC, it's they own interest or units, right? So units versus shares. So when we talk about LLCs, we talk about units, okay? And corporation, it's usually shares. So if I use it interchangeably, I mean units in this way. So all of our limited partners, which there's several people who use their self-directed IRAs, several people who invested as individuals, a few companies that invested in entities, and a couple of trusts that came in, all together put in money to invest in Waldorf Prosperity, and then Waldorf Prosperity used that cash and also received a loan to buy this hotel. And then Kanza Management operates the hotel as a third-party management company or manager. And then TLT Solutions, my company is the sponsor, and we happen to own Kanza Management. But prior to when we first bought the property, we had a third-party manager that didn't have any relationship to my company as the sponsor. So generally, you're going to have a sponsor who is the managing member. You'll have an operator, third-party manager, or perhaps your sponsor has a management company, and then you as individuals, entities, trusts, self-directed IRAs will invest limited partners in that entity. And so this entity gets treated as a partnership for tax purposes. So these are considered pass-through entities, which means that taxes are filed, but taxes are paid at this level. So we'll file a tax return called a 1065 partnership return. And what it does is allocate profits and losses to the members or limited partners here. And then you'll take that information and you'll file your personal income tax, and that's where the tax is paid. Okay, so in limited partnerships, the taxes are paid at the individual level, not at the entity level. Okay, the entity is more of a pass-through entity. So hopefully that makes sense to you guys. We'll take some questions. I'll pause after I go over this structure. So I wanted to share early in the process is that we have Truly Redlands as an investment, and this is a little different than the structure that I showed you before. So the previous structure I showed you was a joint venture. So each investor invested a certain amount of money, and they own what we call pari passu to how much they put into the investment. Whereas this structure with Truly Redlands is where, in this case, we have a preferred model where investors will invest and have a certain ownership percentage, but how they get their money, how they get their distributions and their returns is based on the preferred return. And I'll show an example of that later. I want to just keep moving, but I wanted to show you how these structures can vary. So in this case, we had different classes of shares, which again, I should be corrected as I was by the attorney this morning. These are units, A share units, B units, C units. So over here is where the sponsors lie in the C shares. And then over here, we had two classes. Now, in every investment, you may only have one class or two classes. You may have three, you could have four. So I'm going to talk to you about reviewing your documents and really understanding where you fit as a limited partner in that particular entity and how you are going to be compensated or how you're going to get your money back, which is very important. So this is just another structure where there's multiple classes of shares, whereas the previous one I showed you, there was just one, which was the members who were limited partners. Okay. Now, you're probably wondering, how do we determine, what your percentage ownership is? And, a lot of times your percent ownership dictates your share of the profits or your share of the distributable income. And so in general, this is a general structure here, is that the partnership, when they are buying a property or a business, right, they are going to go and get debt, and then the remaining amount is equity. So that's what the investors, that's what you as a limited partner would be funding, is the equity. So think about it, if you're buying a home, you have a down payment. So you think of the equity as the down payment, because lenders don't tend to fund 100% of the total cost. Okay, so in a project, a commercial real estate project, you'll have a total project cost, and then you'll fund that total project cost between debt and equity. So debt and equity is considered capital. And so you'll hear people say, well, what's your cap stack? What's your capital stack? That simply means is, where is your money coming from to close the deal? To close the deal, you have to cover 100% of the project costs. Okay, so you may have already also heard a term called sources and uses. So the sources are, where's your money coming from, the capital stack, and then uses is your total project cost. Where's the money going? This money, the 65% and the 35%, where is that going toward the project? And it should be broken down as to where the money's going. But the important part of this slide to show you is that as a limited partner, you are a percentage of the equity, not the total amount of capital that goes into the project. So when we talk about ownership interest, percent ownership, it's most likely based on how much equity the project needs. And the amount of money that the project needs is based on what type of loan that you can get, or what type of loan you strategically take. There may be situations where you can get more money, but you don't want to take more money, or the sponsor doesn't want to take more money. They want to make sure that there is a healthy amount, we call it leverage. There's a healthy amount of leverage in the particular project. Okay.
Tracy, we do have a couple
Yeah, I was
questions.
gonna say, you wanna take some
in the
questions?
chat.
Yeah, let's do that.
There's a couple in the chat. The first one I see anyway from Jasmine says, by quote unquote entity level, what do you mean exactly?
So when I was talking about entities, I was talking about, you can invest, you can be a limited partner as an entity, meaning your company. You can have a company that already exists, or you can form a company that is going to invest in the project. Okay, so you would hold your units or your shares in the name of that company and not as your individual name. Hopefully that answers the question for her.
And then there's one more. This is from Camille. What is the initial investment? And I know that changes depending on which project you're looking at, or the fund, or whatever. So I'll let you take that as well.
Yeah, so and that will be different based on every deal. If we're talking specifically about our projects, we'll talk about that very shortly. But every sponsor is going to establish what their minimum investment will be, and what type of investment structure. There are different legal structures, and we'll talk about those briefly, but it's really based on the sponsor. Is there any other questions we want to capture now?
Those are the ones that were in the chat. I don't know if anybody, oh, here comes another one. Loan structure has a timeline due. When is that determined for the due date of the loan?
Okay, so for the loan, the terms of the loan are dictated, of course, by the lender, and the sponsor would select a loan that matches the investment thesis. So meaning each deal will have a thesis, like meaning how is value being created from that investment. And so the sponsor will want to make sure that the loan terms match, right? They're aligned with what the thesis is, or another word for thesis is their business plan, right? How do you intend to add value and operate, this business to make a return to investors? So you want to make sure your loan matches that in the way of maturity date, as well as, payments, etc. You want to make sure that's aligned. So loans are going to be due based on what you get from your lender, and you're going to want to choose one that matches your business plan.
So we did have a couple more come in. I don't know if you want to go forward with the slides, or if you want to answer these next couple are kind of along the same lines.
Okay,
Can you
go ahead.
agree to percent ownership with initial investment?
Can you do what?
Can you agree to percent ownership with initial investment? So that just comes, I'll let Tracy, yeah.
Yeah, so it again, the structure of the deal is going to be really important. And if you're the sponsor, I like to tell, my mentees and the women, in our cohorts that, as a sponsor, you're the boss. You get to decide what and how you want to structure it. However, like any product, any service, it has to be marketable. You've got to have buyers, people that want to invest. So it had better make sense. It had better be fair if you want to get investors to come into that deal. But that percentage is going to be based on what the sponsor is offering. So that actually leads to this slide. Is in some instances, a sponsor would set it up as joint venture equity, and they would say that the ownership interest is going to be based on how much money you put in. So we're going to take the equity, the total equity, and we're going to use that as the denominator. And whatever you put in, you put is the numerator over the denominator. So how much you put in as an investor over what the total equity is would be your ownership interest in that particular project on a straight joint venture equity model. But in some instances, some sponsors may decide to, take some percentage of that and then have the balance of that be split between investors. So it's going to be really important that you do your due diligence and you read the documents. Don't abdicate that responsibility of reading the documents and understanding the investment structure, because they are truly all over, but there is, some base type of deal structures, but they can be whatever that sponsor puts and, dictates in the operating agreement. Once they put that in writing, it becomes a legal document, they need to follow that. In some instances, you'll see it when I showed you that other structure where for the Truly Redlands project, we have 51% ownership interest, but that's only in name, not in economic interest. So the reason why we structured that one, and I didn't want to go too much in detail on that, can be a little confusing, is because when it comes to being a sponsor and being able to go out and apply for, minority-based business enterprise, contracts and different things like that, they want you to have, as a sponsor, 51% or more ownership interest. So it really doesn't mean a whole bunch. It means a lot for me to be able to be nimble and go out and act on behalf of the company in certain ways. But when it comes economically, I'm not taking 51% of the profits, right? So you want to be very careful and understand those structures. Now, in a preferred equity model, your ownership interest may, come to bear. But generally in a preferred equity model, there's a certain threshold. So as a sponsor, we're going to get compensated. We get compensated, based on the risk that we're taking. We earn what is called a promote or a success fee, and we earn that. So in a preferred equity model, there is a certain threshold that investors must get, like we must reach that return before the sponsor earns their promote. Other names for it is a success fee, carried interest. You'll hear different terms, but it means like, how is the sponsor compensated for the risk that they took, the time and effort they put into putting the deal together? But there's usually should be some type of incentive, based on their ability to drive, the value for your investment and get you your money back. So in the preferred equity model, there's some type of threshold, 8%. And then after you reach a certain threshold, then there's a sharing, of the distributable cash flow between the sponsor and, and the limited partners, which I'll show you an example of that. But those are two base models, and they'll come in all different kinds of flavors. So please read the documents and make sure that you understand that. And so in this preferred model that I'm talking about, this is an example of an 8% annual cumulative preferred return. The other thing is, you have to read the fine print. Is it cumulative compounding or cumulative non-compounding, or is it non-cumulative? So much to know in that. And so please read your papers. But cumulative means that if in year one you didn't reach your 8% preferred return, that sponsor, owes you from the year that you didn't reach it. So if you got 4% one year, then you have catch-up payments that are due to you if it's cumulative. Now, if it's cumulative non-compounding, that means that you're just getting 8% a year. So it's not a compounded return, meaning, if you didn't get all of it, then that amount that you didn't get carries an 8%. In most of our deals, we do compounding, just means we accumulate, we make sure you get your 8% annually, but the 8% is only on your initial investment, not on what's due to you. So hopefully that makes sense. So you're going to get money from your preferred return and a preferred equity model, and then you're going to get a cash distribution split. And so these are defined, these are terms that the sponsor defines in the operating agreement. So make sure you read it. Even if they give a presentation and a pitch deck, go to the operating agreement and make sure it matches. It's going to be really important, because if it's not in writing, it doesn't matter, right? It's the operating agreement that is the legal document upon which everything gets, looked at and executed. So in the cash distribution split, the way it works is, in this case, the example, it's a 70-30 split, which means after the 8%, after investors get their 8%, there's a split. 70% goes to the investors, and that gets split up based on their ownership interests, pari passu. And then 30% is earned by the sponsor. That's if the 8% is met. So if the 8% is not met, the sponsor does not earn anything in that particular year. Okay. So that's for during operation. So if we bring this to a hotel, right, we have revenues from rooms, from food and beverage, spa services, whatever the services you have. Once all the bills are paid, the distributable income gets distributed to investors. So the first 8% would go to the investors, and I'll show you a real example. The third way that you get money in a preferred return is if there's a capital event. So a capital event could be a sale or even a cash out refinance. But in a capital event, in this case, it's a 70-30 split, meaning the investors get 70% of the net proceeds after all the bills are paid, and then the sponsors get 30% of that. Okay, so I want to just be clear, and this is something you want to make sure you're reading in your documents. You want to understand that how your sponsor is getting paid, and they need to get paid. You want them to get paid. You want them to earn their fees and things. They're putting the deal together and giving you the opportunity to invest passively. So it's no small task, as Venus and Jenny will tell you, as we've been working on their deals for a while here. So they earn that, but you want to understand how and when they get that money, because you want to make sure there's enough room in the deal for you and your investment to earn a return as well. So here's some potential promote items or earned income for the sponsors. So they could get an acquisition or development fee. So when they put the whole deal together, if it's an acquisition, they'll get a percentage of that whole deal. If it's a new construction deal, they get a developer fee, and those they can range 2%, 3%, 7%. I've seen developers fees up to 7%. Is a lot of work to be a developer and make a project come from a ground, nothing, to an actual productive earning, cash flowing business. So, but you want to know what those fees are and understand how they get paid out. They may also earn, and they may not own all of these. It could be one or more, but you want to read your documents and understand. So they could get a project management fee if there's a PIP, which in hotels, it's a property improvement plan. A renovation, any kind of construction, they can do it themselves, or they, may go to a third party, but you want to be clear who's getting, or if there's a project management fee. There could be an asset management fee. So in hotels in particular, it's very popular, is because it's with a hotel as an asset manager, as a sponsor, you're managing day to day. It's not necessarily, even though you're not managing day-to-day operations, you have day-to-day duties and responsibilities to hold accountable your management company. And there's just a number of strategic elements to maximizing the value of the asset that sponsor has to undertake to maximize the value and get you the maximum return. Some sponsors charge a refinance or disposition fee. Takes a lot of work to get a refinance done. It's almost just like buying a whole new property, and the number of work that they have to do to get the refinance with the lender, as well as if they're going to sell it, working with the broker. Sometimes they'll take a fee on that. And then the success fee is, at the end, or, essentially how that particular deal succeeds. They may carve out a promote or a success fee. And I also, sometimes you'll hear it called carried interest. So these are kind of 5 ways, and there may be other earned fees and compensation. You'll want to read your documents very closely and understand, how the sponsor is getting compensated. Okay. We just talked about that. So I'm going to use introduce you to a term called waterfall. And the waterfall essentially is going to be in your operating documents. And the waterfall is just like who gets paid what, when, first, second, third, fourth. So it generally will have the stages or the steps of the waterfall. And I won't go into that today in the details of a waterfall, but essentially it's saying who gets their money out first. So you'll want to read and understand. And if you're an investor, I say, you should get your money out first when it comes to promotes. That's just my recommendation. Again, the sponsor should have a duty to maximize your investment. And every investment is not going to go 100% the way it's planned. There'll be, sometimes they'll exceed expectations. Sometimes they'll fall short of expectations. Sometimes they may even not turn out at all. But you'll need to understand, what happens in the case with your investment. Okay, I'm going to go through this really quickly because I talked through it before, but this is just to show you about the split. So in this example, this is a real deal where this is, there's usually 2 ways that cash flows are distributed. This is from operations on a preferred return of 8% with the 70-30 split. So after the mortgage and all the bills are paid, in that particular year, there was $200,000 in cash flow. And so there was $1 million investment by all investors, which means that the first $80,000 goes to the investors for their preferred return. And then the remaining cash flow is $120,000. Okay. And so with the actually, I just found a freaking error. Okay. So sorry about that. So this with the, actually, no, this is just the amount that was invested at 1 million. So out of the 120,000 that was remaining in cash flows, this is from operations, 84,000 or 70% goes to the investors and is distributed pari passu to how much they invested. And then the sponsor earns $36,000 that year. Okay, so this is from cash flows. This is just 1 year example. This would go on every year in the investment, and it might be done on a quarterly basis. And if for any reason it's done on a quarterly basis and the sponsor ends up getting more money than they were supposed to on this annual basis, because we want to make sure that the investor gets their preferred return, there's something called a clawback. And a clawback means that the sponsor has to give back what they didn't earn in that year if they're taking quarterly promotes during a particular year. They would have to pay it back. I see Monique has a question. Can someone take her off of mute, or how do we want to do that question?
So yeah, if Monique, if you want to, let's see.
While you're doing that, I'm going to keep going because we're getting close to the end of time and I don't want to go over. So when the investment is all said and done, okay, well, I shouldn't say when it's all said and done, when there's a capital event. So a capital event could mean you're selling the asset, or it could mean you're doing a cash out refinance. And so in this case where there was an 8% preferred return, like after the asset was sold, there was $4 million left over. And then the remaining cash, after investors got their principal back. So in the waterfall, it said that investors will get their principal back first. So every investor, the $1 million that was initially invested goes back to investors. Okay, that meant there was 3 million left in remaining cash flow. So 2.1 or 70% would be split up amongst the investors, and then the sponsor would earn 900,000 in this particular example for its promote. Would earn that for all of the work that it did in putting the deal together. Okay, so this would be on the capital event. So you want to read your documents to see how the investment waterfall is going to work. In the case, is it split up? Is it differently between cash flows and capital gains? Or is it, the same, or is it different, etc.? You want to carefully read and understand, what your portion would be as an investor. Did we get Monique to ask a question?
So I can allow Monique to talk. So Monique, if you're ready, you can go ahead and ask your question.
Okay, thank you. My question was going back to the that distribution deck slide. That $80,000 for the preferred, is that split amongst the members, or is that split amongst the members and the sponsor?
Just the members.
Okay, all right, that was all. Thank you.
You're welcome. So you will most likely receive some type of offering memorandum or pitch deck, when you're looking at a deal. And that deal is, again, should cover these things that we're talking about, but it's not necessarily the legal document. So there are legal documents that you'll want to make sure. I recommend that you only invest if the sponsor has legal documents. Okay, it protects you. It protects the sponsor. If it's not in writing, there's no misunderstanding about what the expectations are. It's in writing. So I would recommend, you can invest without them. I've seen people do deals without them, but I do recommend that you have legal documents. Okay. Now, what are the legal documents? So there's 4 key ones. There's a private placement memorandum, an operating agreement, a subscription agreement, and an escrow agreement. Sometimes you won't see a private placement memorandum in a smaller deal, but that is really a disclosures document. Think of it as a prospectus that you might get with your stock. So that is for a sponsor. We call it CYA. It's telling you everything about the investment, their background, what could go wrong. That's what's in that document. They're rather thick. They're very legal. I do recommend that you read key sections. You might fall asleep if you're reading the entire thing, a lot of legalese, but get to the key factors of understanding the sponsor. That's part of your due diligence and understanding who you're doing business with. You want to know who you're doing business with. The operating agreement tells you how that company, how that partnership is going to operate, how that waterfall is going to work, how you get your money back, your share of taxes, the duties of the sponsor and getting you and communicating with you and getting you financial statements and your tax documents, so that you can file your income taxes. There's a subscription agreement. That's where you're filling it out and saying, I want to invest. This is how I want to hold my shares. There's also information in there that's required when these are, when this is this is not a public offering, it's a private offering. And so you have to answer certain questions that the sponsor is required to ask you to evaluate your ability, to invest. So you need to fill all that out. And then if the property hasn't been acquired yet, you want an escrow agreement, meaning if you're not buying into anything, right? If it's just that the sponsor is going to close, you want an escrow agreement that says what happens if the deal doesn't close. Your money should not be used unless you are investing in an asset, okay? An actual asset. So your money should go to escrow until that asset is closed on. If they've already closed on it and they're getting investors, that's fine. You have a piece of an asset. So you want to make sure that, you have those things documented. Those are the key agreements. There may be others in a particular deal, depending on the deal, but those are the core ones. You want to make sure you have those legal documents in hand and that you read them before you put your money in. The operating agreement, here's some provisions that are in there. I'm not going to go over these, but they do cover what we talked about, that these are the things that you would want to know as a owner of that company, as a member of that company. You want to understand how that company is going to operate. some other key provisions. Okay. For the risk part of this, I'm going to cover this, and then we're going to go and talk about, getting into some real deals. So what you should demand from your general partner, from the managing member, is the legal paperwork we just talked about. You want transparency and access to investment due diligence documents. How they start, and how much they provide you up front is important, because are they going to provide you and let you know what's going on once you've put your money in? You need to have access to information, and it should stipulate that in the operating agreements. They may not provide access to everything, so that's why you want to carefully look at that and make sure that's suitable for you. If they are not going to give you access to 100% of documents, you'll want to know what they are, and you may want to ask the sponsor, if there's something that you would be interested in, why you wouldn't have access. But you are a member of the company, and so you do have certain you have certain rights to certain information. But again, the sponsor dictates that, and it's in the operating agreement. So if it's not an operating agreement, they don't necessarily have to provide it to you. That's why you have to read the documents. You want periodic and consistent communications, whether it's good news or bad news. You want to hear from your sponsor how your investment is doing. I say no less than quarterly, but find out up front. Find out what they're planning to do. What are your personal expectations? What do you need to know, right? What do you need to know? But you want to make sure they're accessible, but you don't want to bug them. Like, you don't need to call them every other day and ask, how's the investment doing? But if you're calling periodically, if for some reason, read the documents. If they are providing quarterly statements, read those as well, but they should be open to talking with you. So quarterly sponsor investment updates with financial statements, everything, again, that you need to monitor your investment. You should get your annual tax documents, your K-1s, by March 15th every year. It's required on the 15th of March every year. It does get complicated, you guys. So as a fund, we have K-1s from the investments. So that's a date that's been set by the IRS, but sometimes it's impossible to get all the K-1s and produce. If the partnership, if the company doesn't provide you the K-1 until March 15th, it's hard for you as a fund or a company to get the K-1s to your members by March 15th. So most people that do active investing, they file for extension. So if you're going to start doing these investments, get comfortable with filing for extensions, because you have to gather these K-1s. Like I can never, I have so many K-1s, I can't file until like October. So just know and be conscious that your share of profit and losses from the company needs to come in the way of a K-1 by March 15th. If you're in a limited liability company in a limited partnership like this, you should be getting K-1s. I've talked to people who are not getting K-1s and they're in partnerships, and you need to inquire about that. You need to read your operating agreement and understand how your share of profit and losses will be communicated to you so that you can follow the IRS guidelines. You want them to be responsive and to follow up. And my most important one is that you need to make sure that your sponsor has fiduciary duty. I spoke about this earlier, number 6 here, because if they don't have any fiduciary duty to you, they can act on their own personal interest with that investment. You want a sponsor who's working and holding your interests as an investor, the investor's interest ahead of their own. So they may breach fiduciary duty, and then you have a case. But if there was a situation in the documents that said that fiduciary was being waived, then you have to take what you get. So make sure that that you're looking for that fiduciary duty. But make sure, again, you guys, do your due diligence. Ask questions. There's no dumb question. Don't be intimidated. If you're giving your money to a sponsor, they should be patient. They should want to answer your questions. Make sure you invest legally. Don't contribute to the sponsor's due diligence risk, meaning don't put your money in for due diligence. Make sure your money is only going toward an asset and that you're not at risk until you actually own an asset. An asset meaning a share in something, not a share in a piece of paper, but in an actual hotel or a company or something that actually the sponsor has, that you own it, that entity that you invested in actually owns that asset. And then trust your gut. If something seems funny, don't do it. And then don't use your last dollars, okay? If you need to invest, with money that you can afford to lose. I am every time, you guys, I try, I just can't get through this, but I'm going to just quickly let you know that you can invest with your self-directed IRA. And so it's any retirement funds that you have, you can work with an SDIR, a custodian that allows you to do investing with your retirement funds. So they do have to go to a custodian that does allow alternative investments, meaning things that are none other than stocks, bonds, and mutual funds, like a private equity deal or like real estate. You can use those funds to invest. There's 3 simple steps that you would take to do that. You're going to choose a custodian, okay, and set up an account. And then you do a rollover of your funds to the new custodian. And then you direct that custodian to invest in the offering. Okay. So 3 simple steps. I mean, just open the IRA, but you got to find a company that actually does it. And here's some that we've worked with before. We can work with any of them, but these companies they were created to be custodians for alternative investments, of real estate, private equity, other types of things like art and things like that you can use your IRA for. There are particular rules around self-dealing, so you'll want to study those rules, and we'll have a session specifically for investing with your IRA, but I did want you to know and be aware that you could do that. So you open up an account with one of these companies, you roll over from your existing custodian, and then you direct them to invest in any particular deal, whether it's our deal or another deal, and then they'll contribute that money directly to the sponsor, and then the sponsor has to send any distributable income directly back to the custodian. So you don't get to touch it until you're eligible to withdraw from your retirement account. Lastly, but not least, exploring limited partnership opportunities. So there are many ways for you to find opportunities. You can come right here to SHAD. We have plenty for you, but you can visit crowdfunding or Reg D portals that post, different sponsors' deals. They just post for them. They're not necessarily involved in the deal. You can search the internet and social media. There's plenty of deals that are being promoted on social media and then different websites. You can attend investment conferences and events. Ask your friends, do they invest in any private equity deals? Your family members, your colleagues, you can ask them. Or you can come to Shad Pitch 2025 and you can network with other hotel owners and investors and leaders in the industry where at Shad Pitch, there'll be deals that are being pitched. You can subscribe to She Has a Deal at shehasadeal.com, and we always send out our investment opportunities. You can also open an account at investors.tltsolutions.net, which is my company and where the She Has a Deal projects that we are involved in are all posted. So tickets are on sale now for Shad Pitch 2020. Oh gosh, it's 2025, not 2024, went backwards. But it's if you want to use the QR code, and I'll put it up again at the end, but tickets are on sale. Will be at the Hilton and Tyson's Corner, which is in the DC metro area on May 1st. We'll have a full day of pitches. We'll have 8 pitches from early careers to today's women, professional women. And we'll also hear from some of our women who have, who did it, who closed deals. You'll hear from, some of our Shad alum and where they are now with their deals after they pitched, which you'll hear from a couple of them now. And again, if you enjoyed, some of this content, if you learned something, if you want to learn more, if you want to be an active investor, or even if you want to be a savvy limited partner and investor, She Has a Deal is a place. We'll be opening up applications for season 7 in May, and Shanika is our point of contact for that. So I know I went long, but I do want to make sure that you are aware of our Shad Momentum Fund and that you hear from 2 of our fund sponsors. So the great thing is, for the first time, we're offering a Reg CF crowdfunding for non-accredited investors, but we also have a Reg D for accredited investors. And so you can invest with us either way. So accredited investors, how is that defined? It's defined as someone who has a net worth of $1 million or more, or an annual income of $200,000 or more for a single person, or $300,000 for a married couple, or actually doesn't even have to be married anymore, as your spouse or partner, as defined in your state. But that's how they define accredited. And if you're accredited, you'll go to tltsolutions.net to invest. And if you're not, you can go to our Reg CF portal to invest. And so the exciting thing about Shad Momentum is that you can invest one time and you'll have ownership interest in 2 deals. So our Shad Momentum Fund is raising $6 million with the first million, 10% going to the True by Hilton new construction project that Jenny will talk to you about quickly. And then there's the Peridot, which we're excited about, this boutique hotel opportunity in Georgia that Venus will talk about. So the majority of this fund will go there because the True is pretty much almost fully funded. So we're taking in our last dollar. So we are going to, through the Shad Momentum Fund, invest in the True and close on that next month so we can start building that hotel. But in this case, this is an 8% preferred model and we have A shares for limited partners, which would own 70. And that's the same thing as that 70-30 split. This fund will operate in like the example that I showed you, but there'll be income from the True investment and there'll be income from the Peridot, which is the boutique hotel, which will fly under the Hyatt flag. All right, so let's hear from Venus. If you guys have to leave, we are recording this. But Venus, why don't you just give them a little, everybody's staying, great. I'll stay and answer questions for those who want to ask questions. But Venus, tell them just a little bit about the project. Venus is the sponsor. She was a Shad alum. Why don't you tell them a little bit?
Good afternoon, everybody. My name is Vina Skirvin. I went through the SHAD 2024 program. And so my investment opportunity is a boutique hotel located in Stockbridge, Georgia. And the Stockbridge is about 30 minutes south of the Atlanta airport area. It's located in Henry County, and Henry County is often one of the fastest growing counties in the country routinely. A lot of year-over-year growth each year, and it is located in it's considered a transfer hub between the Port of Savannah and the Atlanta Hartsfield Airport. So that's why it's a really kind of booming county. And because of that, most of the hotels in that area are in the mid-scale range, targeting the transient and group and business traveler. And so within that area, there's no upper upscale product in that area. So I'd like to introduce this asset class to that market. So we have a 60 key property. It's currently an assisted living facility, and we are going to convert that building into an upper upscale boutique hotel. Thank you.
Thank you, Venus. Here's some renditions. This is existing property that we're converting.
Yes.
It's going to be beautiful. It's going to have that Southern charm. Anything you want to say about the Southern charm, Venus?
It's currently almost a little sister to the country club that's right next door. So we, in terms of the exterior renovation, we want to kind of give it its own identity. So we're working on branding right now that can accomplish that. And so you'll see that throughout the investment if you come on board. Thank you.
All right. And Jenny is building from the ground up a 90 key True hotel. You want to talk about that, Jenny?
Yeah, so I just wanted to make sure all the questions, I was trying to keep up with them over in the chat, and there's a few that haven't been answered yet. So maybe the team can just look over those while I'm doing this real quick. But yeah, so we've been working on the True in Redlands for a couple of years now. I cannot believe that almost 2 years has gone by since I pitched this deal. And Tracy decided her fund wanted to invest, which it's just been a great ride ever since. We have had to work really, really hard to raise. And one of the things that I just know is going to happen as She Has a Deal continues, and there's more women that go through and there's more alumna that work on deals, is that it's going to be easier and it's going to get a little bit easier, and there's going to be more investments available. This one is just a terrific one. It is a true, that is one of the newer brands of the Hilton portfolio. It's on an interstate. It's a Rockin location. It's a mid-scale property, and the occupancy is very high in the area, and the supply of rooms is constrained in the area. And so we've just continued to feel very strong about the location. We're very excited. And yes, we're almost there. We have, I don't know what the dollar value is, maybe not quite up to $1 million left to raise, but we are almost there and expect to be there shortly. And so there's just a little bit more room. Jump in if you want to. Would love you to come in the Momentum Fund. And let us know if there's any questions. I think there was, yeah, some SHAD tickets and stuff available too, which is just a fun place to learn more about everything SHAD and everything deal making. So, and thanks everybody for being here. This was really fun.
Thank you, Jenny. Jenny's doing a fabulous job. She is extremely savvy on developing. So she's been teaching me. Here's some renditions for what we're building or will be building. We'll be breaking ground very soon. We're so close. All right, so if you want to join us in investing in the Shad Momentum Fund, which again will own 2 hotels, one investment, 2 hotels. You have a piece of the Peridot and a piece of the Tru. Really simple steps here. No, it looks a lot like a lot, but our friend Krista will be there to help you with that. Essentially, if you are interested and you are accredited, you can go straight to investors.tltsolutions.net, register for an account, and you'll have all the information that we've been talking about, and you can invest directly from there. And then if you are not accredited, go to Invest with Shad, and that'll take you to our Reg CF portal where you can invest in the Reg CF offering. Both offerings are, again, available to anyone who wants to invest, but it's quite simple. I'm just going to go through these steps, and I know we're over time, so please thank you for your patience, and hopefully you learned a lot here, and I'll answer questions. I'll stay and answer questions, and this will be on the recording as well, so I'll stay and answer every single question. So you're going to review the investment opportunity. You can have an info session, this is somewhat of an info session. This is more about education today, but you can schedule a one-on-one with myself or any of the sponsors. But you can go onto the website and the information's there. We have recordings from previous sessions, etc. And then you register for an account if you are, on the investor portal. If you are Reg D, you can complete your due diligence documents after you read them. Remember, I talked about reading them. Those are on the portal. And then you would complete your subscription agreement, which tells us, how you want to invest, and you answer some questions that we need to know about you. Once we receive your documents, so after you fill out the subscription agreement, you sign, and then we accept you. We'll execute, we'll review the documents and execute, and then you wire the funds to secure your ownership interest. So you lock in your spot in the Shad Momentum Fund, because we will only raise until we get to our 6 million, and then we'll close it, and there won't be an opportunity to invest in those projects anymore. And then you earn passive income, and you can track your performance on our investor portal, real time, open 24 hours a day. And then we have quarterly meetings via Zoom, and then we send out quarterly reports. So if you don't have time to attend the Zoom, you can review the quarterly reports. But I do love to have the Zoom meetings because I want investors to, be connected and to be able to answer or ask questions real time. And then every year you'll receive your K-1, which is your share of profit and losses, to file your personal income tax annually. So it is a passive investment. We do like to educate and teach. So again, those Zoom calls, quarterly calls, are somewhat educational as well. And Crystal is there. She's here to help you if you have trouble completing the documents. The Reg CF is new for us, but we're becoming very versed in that. And the difference, people are probably asking, what's the difference between the Reg CF and the Reg D? So again, if you're accredited, that means you make over $200,000 or more, okay? Or it's not and, it's or you have $1 million in net worth or more, then you can invest in Reg D. The best pathway is Reg D because the share price is only $100 a unit versus with Reg CF, it's 110 per unit. And so the Reg D also has a minimum of 25,000, and then the Reg CF is 2,500. So you can invest less with the Reg D, but you are limited in the Reg CF to how much you make. So you can invest 5% of, if you make, let me back up. If you make $124,000 or less, you can invest 5% of your income or net worth, okay? Whichever is greater. If you make more than 124, you can invest up to 10% of your net worth, right? Or your income, whichever is greater. Okay, so there are some limitations. Those are all legal limitations. That's not us. That's the law for these private investments. So again, reach out to Crystal if you have questions about that. But we are here to answer any questions that you have through the investment process. We can help you with the paperwork. We really want to be a good resource to you and a trusted investment partner. We take this very seriously. We are about earning passive income, and we're also about empowering and inspiring people to, leverage real estate, hotel real estate to build wealth. It does work. I'm an example. It does work. So we want to make that available to you. Passive income, we do the heavy lifting so you can enjoy the passive income. I'm going to answer some questions now. I'm going to leave up this QR code. So if you want to attend Shad Pitch, it's the best way to learn, connect, and even invest. So you'll be there to touch us and, get to know us and get to know other people that are in the field and some fantastic women that are the future generation of, hotel owners, hotel sponsors, actually commercial real estate sponsors, because Shad is about creating more women who are sponsoring real estate investments, as active investors, leading and quarterbacking the deal.
Tracy, I just hit that QR code and it's going to this webinar, and I saw somebody else in the chat say that it wasn't going to Shad Pitch either. So I don't know if you guys can throw up a new one.
Yeah, Shanika, can you put that in the chat?
Yep.
I grabbed the wrong one. If you could put the directly to the pitch in the chat, and then maybe I can put it up. Okay, other questions? What questions do we have? And this is bugging me because I have the wrong date. I went back a year. We don't want to go back a year. We only want to go forward.
We have a hand raised in the audience, so I might.
Oh, Alicia, yes.
Alicia, you should be able to talk now. All right, maybe we lost her.
I have a question. Go ahead, Jeanette. Yes.
All right, go ahead.
Did we lose her again?
Yeah.
There is a question from the audience, Jeanette. I don't know if you wanted to. Sherry.
Is there any in the chat?
Sherry asked, the investment are not directed to Venus project, but to Shad, who then send income investment to the other projects.
I'm sorry, say that again.
I think she's asking about the Shad Momentum Fund instead of her to Venus project, the Peridot. So Shad Momentum Fund has, I don't know, Tracy, if you want to explain as to.
Yeah, so the Shad Momentum Fund is investing in both projects. So if you invest in the Shad Momentum Fund, you will have an ownership interest in both projects. So the Shad Momentum Fund will have the ownership. You have ownership in Shad Momentum. And because you have ownership in Shad Momentum, you by default have ownership in both properties. Majority of the Shad Momentum Fund will go to the Peridot because the True already has majority of the money that it needs. So the True only needs about $1 million left, which we intend to cover probably within the next 2 weeks, if not this week. Got some things, coming in. So yes, hopefully that makes sense. So a fund invests in multiple projects, so it helps you to diversify your investment, but it is going to be more weighted to the Peridot because the True has already almost fully funded.
We have 2 other questions, I guess. From Monique, when is the deadline to invest in Shed Momentum, and can you purchase more than once?
Yes, so Shad Momentum's date closing is geared up for the end of April, but do not wait to the end of April because we will close as soon as we have raised all of the capital. So, but yes, you can invest if you want to invest now and then you get some more money before we close, you can invest again. But once we close out the investment. So the reason for that is that we only need so much, to acquire the property and renovate the property and then build the True. And so the more money that goes in, you dilute your investment. So we only want to get just enough that we need in order to operate the investment. So that's why we close it once it's full. Now we will have other investments in the future, but these are here right now. And these are 2 amazing projects with 2 amazing co-sponsors here. Venus didn't tell you she's an architect, and Jenny's been a developer in construction, developing all types of assets we just won't do all of our years, Jenny, like it's all in the documents. They can already tell like how long we've been around doing all this. But yeah, are there other questions?
Not seeing any others in the chat.
I think
Um,
Alicia's back.
And
The question. I see Alicia popping up again.
Okay, I think I see Alexandria's here in the Q&A section. So
Okay.
is there an absolute cutoff date for funding, or is it just until the number is reached? I feel like we kind of touched on that, but she's given an example. So fundraising deadline is February 2026 and the 6 million monetary goal is not reached. Then what would the date be?
Okay, so if we're here in 2026, we in trouble. So yeah, so we will, the fund is legally open for 12 months. Okay. So in 12 months, we would either close it out. We give you the opportunity to take your money back, which is written into the documents, or we would amend the fund documents. Okay. But we are targeting, we need all of you who want to invest to act now. We need to close this by the end of April so we can be open in 2026 when the World Cup comes to Georgia. I think the World Cup is like in a few cities, but we're breaking ground next month. Anytime, close to, I would say, since it's, March 25th. So we're going to break ground soon, very soon for the True, getting those last dollars together. And we want to be open in 2026 as well. I don't know if the World Cup is coming to LA, but the Olympics are in 28. We'll be well open by 28, but the Olympics are coming to LA, and I just know we're going to get much more business in 28 from the Olympics because we're not that far from LA, and a lot of events are spread out throughout, California and stuff too. So there will probably be compression there. But yes, really, you guys, there is urgency as a matter. We have a little over 30 days to close on the Peridot. It's an amazing opportunity, and we really need you to come in if you're going to come in as soon as possible.
All right.
we have 2 other questions, Tracy. Alexandra asked, so once the True property is invested at 100% in the next week or so, will all the other investment go to the Georgia property?
Yes, it will.
And then another question, I think, somebody already answered. If
And just
you're-
so you know, some of the investments have already gone to the True. So some of the dollars that have come in already have already gone to the True. So that's why we're saying around $1 million. I just haven't done the full accounting, but we have had monies come in and go, some to the True.
And then we have another question.
Lisa still has, Jasmine has a question too. Jasmine's got her hand raised. I don't know if we can open her up.
Yeah, her question is, will your master classes be available to the general public who wants to learn more, but do not want to go through the pitch process?
That's a great question. So I'm looking at Shanika because we hired her so that that can become a reality. We have actually created content, and we've just been so busy with deals that we have not launched that content yet. So our goal is to launch that content later this year. But yes, that is definitely going to be an option for you. And then also we're going to do a better job at doing, now that we have Shanika, just doing more educational content too, in small bites like this for you.
And we have a question from Alicia. Finally, she asked the difference or benefits for doing Reg D versus Reg CF.
Yeah, so the share price is a lot lower, so you're going to make more if you're in Reg D, if you can do Reg D. But don't hesitate if you're not accredited to do Reg CF. You're not going to lose out on anything. You're just going to have a greater return. You should have a greater return, I should say. This is an investment, so you should have a greater return because the share price, everyone knows, the unit price is lower with the Reg D, which means you're going to get more out of what you put in. So that's the advantage to doing Reg D over Reg CF.
And Tracy, can you touch on your net worth calculation just real quick?
Yeah, thank you, Venus. So a lot of people I've been talking to prospects all week, and I would say, are you accredited or non-accredited? And people are like, oh, I don't know, or no, I'm non-accredited. A lot of people, nope, I'm not accredited. And then we start talking and they realize, oh, I am accredited. So net worth is your assets minus your liabilities. Now, for purposes of accreditation, you can't include your home, but and I, you know what, Venus, I'm stopping in the middle just because don't let me forget this, because I want to do a little research as I was reading that article that came out recently, with the new rules. And it said in certain circumstances, right? So I have a feeling that maybe some equity or something might be included. I'm not sure there. So let's put a pin in that. But it's anything like if you have a business, what is the value of your business? You don't necessarily have to go out and get an appraisal, but there should be some value that value that you give for your business. It's any cash accounts you have, any retirement that you have, any assets. I mean, your car has some value potentially. Your wedding rings, your artwork. I mean, net worth is based on assets. So you can chat. I'm like Chat GPT is my friend now, or whatever those one. But what are specific assets? So you'd be surprised sometimes the assets you have that you didn't think that you have. So don't just think about cash. Go into your retirement account and look to see what that number is, and any other types of asset accounts you have. Even in your insurance face value, is it face value? What is it when you have cash value? In your insurance accounts, you may have some insurance, whole life insurance, things like that. They would count towards your net worth as well. Does that answer that, Venus? Was that clear? But yeah.
Yep. Thank you.
It's actually a good exercise to do if you haven't done it in a while. Like, I am constantly, because I have to do it for being a sponsor, but just really keeping track of your assets and putting them in one place. And if you don't, if you have an estate plan, you probably already do it. But if you don't, it's just really good to, just really keep track of how your assets are growing.
All right, awesome. Well, thank you for that. I believe all questions have been addressed and answered. If not, I believe Shanika put her email address in, Crystal did. You can always reach out via investwithshad.com. This recording will go out as a recap, so you'll receive an email. So even if you're not here live, you will receive this in an email format. But yeah, always reach out with questions. Obviously, you can see Tracy loves to answer questions. We have an event coming in May 2025, so lots of things to discuss. And we are looking to have a webinar again next month. So these will be recurring. You will be able to get your questions answered. So I appreciate everybody for coming out. Thank you to the team. And yeah, you can learn more about the Shad Momentum Fund. You can also go to investwithshad.com in addition to the TLT website that Tracy had mentioned earlier. Tracy, I don't know if you want to say that website again. I don't know it.
Yeah, so Invest with Shad, you can find out about the Shad Momentum Fund, but shehasadeal.com. You can also get to the ticket sales since my QR code was not working. But you can also get to the Shad pitch tickets. But I just want to emphasize, if you want to learn more, just by watching the pitches, I guarantee you, you will learn in addition to the networking that will be going on at Shad Pitch. Also, we give away prizes at Shad Pitch. I just wanted to emphasize that before we hang up, is that we like for our attendees, our guests to participate in evaluating the teams and voting for their favorite team. And if you participate, you have a chance to win room nights across the world, right? As well as fun little prizes, Shad swag bags, etc. Okay.
Awesome. Well, looking forward to it. Thank you everybody for attending and have a great rest of your day. We'll talk to you soon.
All right. Thank you guys. Good to see you all.